Good afternoon, everyone. Time for another silver update. This is the 2-hour chart of the US dollar index provided by netdania.com. You can click on the link below. Now, quite unexpectedly for many, but certainly not unexpectedly by some, they are beginning to dump the dollar after they chased everybody into dollars by crashing the gold and silver markets. I apologize for not getting out an update during these times. Unfortunately, I was tied up all day doing taxes because the tax man has to be paid. But we can see here with the rally in the euro. Now, this just began pretty much this afternoon. You can see the euro has run nearly 1.5 points against the dollar. And the Japanese yen certainly has had a tremendous run over a short period of time and seems to be topping out. So if we get a rally in the euro and a collapse here in this chart here, so a rally in the yen, then we're going to be looking at possibly a catastrophic sell-off in the US dollar, which appears to be beginning. So their game seems to be working successfully. Now let's jump over to the silver chart. This on the long view, I pointed out on the blog, actually out to the weekly. It appears that we have put in that technical, very, very important bottom. May not be completely in, but you can see here that we're very, very close to the type of correction that we did all the way back here, where in 2008 we corrected back to that 2004 top and then rallied from there. So this is starting to shape up to look a lot like this one, and you can see the strength of the rally that came after that. And we may be shaping up to see something like that. Pretty strong bounce so far. The bottom was 22. Now, I didn't get a lot of sleep the last few days watching this and trading. Well, not trading, but watching the physical. I did manage to get in at 24 and got in again at 23. I have not bought at 22. So if this is the bottom, then I missed it. But I did manage to stack the largest amount of silver that I've stacked since the 2008 bottom in October. This is where I went all in last time on silver, and this is the second time I've pretty much gone all in physical silver. Now that's almost a can't lose proposition in my mind. I may be wrong, but we're seeing the anecdotal stories. I'm going to cover those when I look at Bill Holter's article because he covers most of those. But the availability of junk, APMEX has gotten some junk in and then they've lost it all and then they've gotten more in. It looks like their buy price here there's a pretty big spread. So I don't know why anybody would be selling silver at these prices, but nevertheless, someone apparently is, and you can see here on this APMEX price, you divide the number by 715, and you're going to get about 39.5 bucks. So 39.5 bucks is roughly $6 above spot. Now, $6 above spot for junk silver is absolutely unprecedented. The only other time that I saw this type of disconnect between the physical markets and the paper markets was back in March of 2008 with the Bear Stearns collapse and the top in the silver market. When the silver market was falling, the prices in the paper market were falling, but the physical prices the premiums just continued to ratchet up. So for all intents and purposes, the price pretty much flatline. Now that doesn't mean you can't get some things. A lot of the unrecognizable rounds and a lot of the strange bars and stuff, the lesser known bars, those are available. And for people who like those sorts of things, those are tremendous opportunities. But for the main ones, the Silver Eagle, the Maples, the ones that I like, the ones that I managed to stack on this Mac were the Perth coins that I like for a large number of reasons. Managed to get quite a few of those for $3 and $4 above spot. So in my mind, that's a fantastic deal, and I kind of surprised by the number of people complaining about this smackdown. It's really a tremendous gift to silver stackers. The most unfortunate thing being that they can't stack anywhere near the price that the paper is printing, but that's to be expected because in my mind the markets are beginning some type of disconnect process. And that brings us over to this Bill Holter covered on Silver Doctors. Force majeure was the end game all along. COMEX will default in the next week. Now that's pretty bold call. I know that Bixweir has been giving a countdown. I think we're at 28 days. He's actually giving a daily countdown of when this is going to be over. Bill Holter is much more like myself. He's just looking at the supplies, the prices, whereas people like Bixweir and Andrew Maguire and Jim Willey, these people have sources inside the bullion markets who tell them things. We're all seeing the same thing that is pointing to a possible force majeure on the COMEX and even the LBMA. And of course that's going to be endgame. So let's read this. The COMEX will default in the next week or several weeks, and people will be settled with dollars. No more metal will be delivered. So knowing that game over has arrived, they are dumping a massive volume of paper contracts with impunity to push the metal prices as low as possible before the default. This way the shorts do not have to and will not be covered when supply cannot be obtained because of an act of God. They will be settled in cash at a profit no less because these unforeseen disruptions in supply. Who could have seen it coming? Will be the mantra. I would suspect that the banking stress and bail-ins will also become prevalent globally. Now you have to remember that in my mind this all ties in with Cyprus. We saw a tremendous rush into the Bitcoin with the Cyprus thing. We didn't see that money rush into gold and silver, which would be the natural reaction of anybody who's starting to doubt not only the value of their paper currency, but the actual safety of their paper currency held in banks. So the first thing that you would expect to see would be bail-ins such as we saw in Cyprus, where they just give everybody a haircut. But after that, of course, we would expect them to go after the people with the money stuffed in mattresses, and the way they do that is a currency devaluation. So both of those potential events would cause people who are afraid of losing all their savings to chase into the physical metals. And so that, in my opinion, is why we had this tremendous smackdown. They knew that that was going to be the reaction, that when there would be bank runs, that people would first stuff it in the mattress, and once they thought about it, they'd realize, no, I need to get it out of the currency. This smackdown was an attempt to discourage that sort of behavior. We know from watching the action in silver that the powers that be know that people react to prices rising and prices falling. We go over to my site here. You can see I had the largest day by far on the site yesterday. So we know that people react to movements in prices. That's why they could not allow silver to rise above $50 and continue rising above its all-time historical high. It would have drawn in an enormous number of buyers. But at the same time now, as people are a little bit more sophisticated as to the games that the banksters play, we're actually seeing a tremendous rush into physical here now at this low. So it does appear that they may have painted themselves finally into a corner that they can't come out of. So let's continue reading with Bill Holter. The pricing structure will now push any and all physical sellers away from the markets, and the door to safety is effectively being shut. Either you own the metal or you don't. After the closure of the COMEX and the LBMA doors, there will be no availability and price will be meaningless. Now, this is what I've been saying. This is what Bix Weir has been saying. This is what Andy Hoffman has been saying. This day is coming, and the stacking will end because there won't be anything to stack. Your ability to protect yourself is right now, for all intents and purposes, being eliminated. Last week, Barrick Resources announced the postponement of their giant Pascua Lama mine. This was to be one of the world's largest mines and is now tied up in litigation over true ownership, as it appears to show that Barrick does not have clear title. I apologize, this was actually Silver Doctors here who wrote this, and this is Bill Holter now. Sorry. This was to be one of the world's largest mines and is now tied up in litigation over true ownership, as it appears to show that Barrick does not have clear title. Now, I've warned about this for a long time. The risk of owning the mining stocks, it's just a crazy risk. There's so many things involved there. And I can pull up the charts of the gold miners, Gold Corp and others, dropping a lot faster than gold. Simply no reason to invest in things that can't outperform the underlying asset and are being manipulated. And now we can see with title disputes, there's another risk. The probable reserves were nearly 18 million ounces of gold and almost 700 million ounces of silver. Work on this mine was completely ceased last Wednesday. Quote, last Wednesday was also an important day for the Kennecott copper mine in Utah. The ground started to shift more rapidly prior to this weekend slide. They knew this was coming, and as they closed the visitor center on April 1st and had all equipment and personnel out of harm's way. This mine produces some 400,000 ounces of gold and over 3 million ounces of silver as a byproduct of copper. This is the largest copper mine on the planet. Have you heard even a peep out of the mainstream media on this one? I don't think so. Is it not strange that these two events came to a head last Wednesday, the same day that out of nowhere gold reversed from being up and give up $40, and then of course there was Friday with $85, another $75 this morning. Gold is now down $200 per ounce in just over 3 trading days. Between these two projects, one not coming online and the other going offline, a very significant amount of production is not going to happen. Does this make sense? Did you not learn in school that less supply meant higher prices in the real world? We don't live in the real world. We live in a world where everything financial is manipulated. Here's what I see happening. They knew that this mine was going to collapse and production would stop. Then the ruling on the Pascua Lama mine was sent down. Last Thursday, President Obama met with 15 heads of the biggest banks and brokers in the country. This was discussed as sure as the sun came up this morning. We've hit the bottom of the barrel. Reserves that could be fed into the market are and have dried up at the same time that production has dropped and future production delayed. The paper game is blowing up right now. And the topic of discussion at the White House was about how it would play out. The COMEX will default in the next week or several weeks, and the people will be settled with dollars. No more metal will be delivered. I already read that part. I tried to be nice in my piece last night, talking to those who worry about price. What is now happening is exactly what I spoke of. You must count ounces because availability is going away right here, right now. After the closure of the COMEX and the LBMA doors, there will be no availability and price will be meaningless. Your ability to protect yourself is right now, for all intents and purposes, being eliminated. We received very few angry letters from customers who say that Jim Sinclair, Mr. Sprott, and Embry, James Turk, and others, including myself, are and were wrong, that we should hang our heads in shame, and that we are nothing more than charlatans hawking silver, gold, and silver. We will soon, very soon, see just how right or wrong we really are. What is happening right now is very clear to me. What I don't understand is how anyone could miss this as it has all been laid out for you and dropped into your e-box to see for years now. Understand and prepare for life. All of life as we knew it is about to change forever. Hopefully you understood this and have already prepared for it. So, excellent article. I agree with it 100%. I don't know if I agree that this force majeure is going to happen this quickly, although it very well could happen. It seems that they're willing to risk everything on this. What that tells me is that their banks are about to blow up. Something very, very large is about to happen. There's another chart on Zero Hedge that actually it's posted today that shows the coordination of the gold price with the beginning of financial events. There is some very, very, very large financial event on the horizon right now. The stock market fell in sympathy yesterday, but is now rallied, and now we're seeing the dollar dump and the euro rally. So it very well could be the case, and you can see here the dollar continues to drop. It very well could be the case that we're looking at some type of force majeure. As I've warned, the only place to protect yourself is going to be in physical silver and physical gold. They've shown with Cyprus that they're willing to give everyone a haircut, so your dollars aren't safe in the banks. I suspect that they're going to come after the mattress stuffers next, and your dollars or euros or yen or whatever they may be probably aren't going to be safe in the mattress as well, because they can just simply devalue those or do anything they want. So the only place that's safe to protect yourself is going to be the physical metals, and those of us who've been stacking for years are looking at this as a gift. And if the force majeure does come, as some are predicting, then of course there will be no price for those physical metals until everything settles. And we'll talk to you next time.